So the idea is, if price is to break this trend line and keep going up, okay, just remember there will be a 50 SMA, and once you break this one, keep going up, this is where you will target, right? Once you break this trend line, you will go to the second trend line, okay, this one and this one. Hello everyone, welcome back to FX 20 pips. Today is Friday, the 2nd of June 2023, and time is now 12:16 p.m. GMT +8 my time. Now currently we are looking at the 8 hours chart because I want to talk about the continuation from the recap at the beginning of the video when you see it, where I talk about the progression of one trend line to the other, and this is what happens. All right, so the price break and close above this trend line, okay, did a retest, and now it is going up. Right, I talked about the 50 SMA, okay, which as you can see, the price went up here and then came back down. All right, and indecisive candle, and then subsequently the price broke through the 50 SMA, close above, and now it seems to be heading towards this area, okay, the next trend line. So as you can see, just by drawing two trend line, point 1, point 2 to get this line, and point 1, point 2 to get the second trend line, you can have a bit of probability of price breaking one trend line and heading to the next one. Now of course, if the price didn't break here, it might have just carried on down, but the fact is the price did what it has done. So that's my point here. And the second thing I want to talk about is the white lines here. If you can remember, it is the higher time frame Fibonacci level. All right, and I'm just going to change it to the weekly time chart here. There we go. So just ignore this one. Let me just open up. Okay, now you will notice that you can see all my drawing here now. Okay, because I realized that when I try to hide this one, the video seems to be not sharp. All right, and I also don't want to have this as a distraction to you. So I was weighing up. I think that, you know, the video quality is more important. Okay, the sharpness is more important to have a better viewing experience. So you just gotta bear with me. All right, if you are looking at all these layers and layers of information I had there, okay, just don't look here. Okay, you'll be wondering, what is this, what is this, what is this, what is this. Right, just look here. This is more important. Anyway, what was I going to do? See, I just yabba and talk about other things. All right, yes, I was going to hide these two and bring back the fib level just to show you that I remember previously in the higher time frame when I did a video, I mentioned about if there is a bounce on this level, that means the bullish trend most probably is strong. Okay, that was the statement, and now it seems to be bouncing off. Okay, we are at the end of the week. It's Friday already, so I'm just wondering whether it will close above the high of this, Right, what is the level? Just can't remember now. This is at 1.25465. Okay, whether you will close above that. If you close above that, or even try to have a spike up and close somewhere close, then again, in terms of probability, higher chance it's going to keep going up, and then retest this level again, right? And that is the level of 1.6798. Right, that's a higher time frame, but my point is to tell you that there's a bounce here at the 38.2%. Alright, so let me just change that back to 38.2. There we go, much clearer. Let's go back to the 8 hours. Okay, let's pull back the trend line again. Right, so we are back here. Remember we also had the I call it buy and sell zone for yesterday. Okay, so I'm just going to zoom into the 1 hour and we can talk about that. Right, so this is today, Friday. Okay, a new day. It was yesterday. And yesterday we had the buy zone and sell zone. Right. As usual, the first and second candle is very important. As you can see, the first candle closed below the sell zone, but there is no continuation of bearish candle. Okay, let me just zoom in. There we go. So what happened was the second candle went right back up into here. Okay, in a sense, it sort of reject the sell area. It doesn't want to go down. So at which point do you start buying? Okay, depending on your personality, how much risk you want to take, how many times have you seen this happening? Okay, this is all based on experience, and that is why you must always do the same thing, draw the zone and see how it reacts. Okay, what I can tell you is the moment the second candle starts going up, there's a very high probability that it's going to keep going up. Why? Because of this 50 SMA. So think about it, price comes down, supported by this 50 SMA. The next hour when it starts, price go down and start to reject. Right? So you can buy here when it start coming back up with a stop loss here, isn't it? Wouldn't that be one of the logical points? And what you will be rewarded is this higher movement to the top. So your fear would be, if I were to enter here to aim for the buy, it sort of contradicts the idea that but it's below the sell zone. And that is why you need to have more confluence. Okay, but let's look at how much risk you'll be taking if you're doing that. Say if you buy it here and you put a stop loss here, what are the risks that you're going to have? Okay, just an estimation. Okay, from here to here is 9.8 pips. 9.8 pips, and you get rewarded by what's the highest here? 130 pips. That's pretty good, isn't it? Okay. Yes, of course. During that time, During that time, we wouldn't know how far it will go. But I do know that on a higher time frame, it's going up, and that is why I don't look for sell. I only look for up. I only want to buy. Okay, so I have a higher time frame bias of buy, and that is why any opportunity that presents itself here, why am I not buying? Furthermore, how about the theory of from one trend line to the other? Why am I not buying? Right? And I can explain further. Break of the trend line, retest of the trend line, come up here, hit the 50. Why am I not buying? Okay, since assumption is higher time frame is bullish, we broke this trend line, we are moving higher. This is support by the 50 SMA, right? No doubt, you see it barely breaks above this structure, but we have a higher low, right? And if you were to draw the P wave, this would have already told you there was a breakout, and this one just come back and went up. So how much more confluence do you need? Okay, if you don't trust your own setup or your own drawings, then it's quite difficult to move on, okay, to better yourself in this trade. And that is why I said to do your daily routine, to keep looking at the chart to see the patterns, okay? And the patterns I'm going to talk about in more details is Fib, okay, Fibonacci. So here we go. We have the Fib, all right, and what do we have? From here to here is about 50%. So there is so many theories that just screaming to you to buy. A bearish and a rejection never close below 50 SMA. Fib rejection of 50%. The idea of breaking the lower trend line to go to the next trend line. All right, if you seen the setup, take it. You got to trust it. Now let's move on. So here we can see the price exceeded this level. So how far can the price go? Let me remove this one. Okay, I am always very interested in why price turn around at an area, why the price stop at this level. Okay, and from my curiosity, I always know that Fib plays a part. This is a normal Fib here, right? This is the extension. This is what we normally use. This is the extension. So let's run an extension, which is 0.1, 0.2, 0.3, right? So you can see price got stuck around here at this level. If you use the extension 0.1, 0.2, 0.3. Okay, let me just remove some of the things so that you're not confused. Right, so how the FIB extension works is from here to here is considered 100%. This leg, alright, is considered 100%. So when the price retraces, and the theory is if it's going to expand with the same length, then the FIB level will show you how far you will go. That means from here up to here, which is 100%, this length is the same as this length. Okay, so obviously when it comes to this level, it has extended to 127.2%, right? And then if it comes to this level, it has extended 161.8%, and we will be very close to the top of the trend line. Okay, so I'll show you another one. Just hang on, let me remove this one. So remember how we used to do this one, the previous one, here to here, right? And I always say this is normal FIB, eh? From here to here, it hit 78.6, it will come here, right? Which it did, came here, retest, shot up. Okay, you see how it shot up here to hit this level. But then when it keeps going up, what does the extension show us? Let's look at the extensions. 0.1, 0.2, 0.3. Right? Can you see that? So if at any time when price went up above the extension of the normal FIB, I will use a FIB extension to find out why is it slowing down here, because it's trying to reach 161.8. Okay, it extended itself. Do you call this overextended? I wouldn't class it as overextended. I'll put it as future targeting level by the FIB. Okay, Fibonacci is the only one that look forward. Okay, any other indicators are sort of, how should I put it, reactive. Okay, they just run mathematical formulas and then just push out some reactive information to you. However, Fibonacci always have advanced level for you to determine the potential profit. Hope you understand what I'm trying to say. Okay, so let me just remove the FIB, the original FIB. Okay, so hope this is clear again. 0.1, 0.2, 0.3. This is the initial expansion. So the moment it retraces, alright, you want to see or know in advance using Fibonacci how far it will go. So you use these extensions. 100% is this level. Okay, 127 and 161. So this leg here is 61.8% longer than this, and that's where you see where the price is currently stopped at. Is it just coincidence? Maybe, I don't know. Alright, do you believe in Fibonacci? Well, you can don't believe it. I'm not asking you to only use Fibonacci. Okay, use any tools that you are comfortable with. Alright, but please also use Fibonacci. As I have explained in my Discord group, alright, and as I have shown it to you here. Okay, so let's move on. This was from this leg, eh? So I have also done from this leg, isn't it? And it's pretty close here. So let me just draw again. On the second leg, here to here to here. So we could be looking at another level here, all right, and there will be some movement here. Now that's on Fibonacci. However, today there is the non-farm payroll, isn't it? Okay, what do we have? We have, oops, where am I? Oh, we have non-farm payrolls today. My time 8:30. Okay, you just figure out your own time zone, right? And I am expecting some range rather than trend movement today, right before the non-farm payrolls result. Okay, meaning that price should be ranging here until the non-farm payroll. All right. So we wonder whether it will break through here or it will come down based on the result. So what I am thinking is I am expecting the news to cause the price to spike down, okay, to fib level before going up again, and then hopefully I don't think it will close above here, but maybe to test it with a spike, right, and then it will be next week job to break through here. That's in theory anyway, okay, and what I think doesn't matter. You just got to follow the markets, okay, look at the candles, wherever it moves you just trade accordingly. Now having said that, let's look at the normal fib. Low, high, okay, I'm not going to I'm not sure whether I want to put a high here, but let's look at this one first. All right, if the news were to come in and for whatever reason the price wants to go down, this would be the level that I'm expecting it to come with a spike onto here. That's very drastic drop already, isn't it? Before going up again. Yep. Reason why is because there is just too much bullishness here. Okay, banks don't like that. They like to take back some orders before going up. Okay, in order to come back down, I believe they will use the non-farm payroll news to force the price down. Alright, so what if I put the high to here? There isn't much of a difference, isn't it? It's just a few pips up above. Alright, so yeah, just manage accordingly, whether you put a high here or high here. There's no right or wrong way to do it. Okay, right, let me remove this one. Let's close this one. Yep. Okay, so let's go back a while to look at the 8 hours. Okay, let's try to do our daily activities first. Where is my range box? Here, 8 hours. So price has closed above this 8 hours range. There's a continuation. It sort of slow down around here. So what I will have to do is to block this one up. Okay, let's do that. Go up here, right here, stand it. That's my new 8 hours range box. Going back to the 1 hour, let's draw a buy and sell zone. Okay, what time are we at? 12:42. So this could most probably be the high of the Asia, and this is the body, so there'll be 2 lines here. And then this could be the low of the Asia and the body, so I'm just going to draw here. Okay, do this every day, and let's do it. Top, bottom, expand it. Okay, just to make it look nice. Go to the configurations. Here we go. Another one. Bottom here. Expand it. Just make it look nice, and then sell. So this is the zone for today. Alright, so we have the 8 hours as in the gray. We have the breakout buy here. That's the low and high. Yep. So if you were to zoom in to all these candles, let's go to a lower time frame. Let's see what it looks like. Let's go to quick glance at 30 minutes. Let's go to 5 minutes. Alright. Would you want to put a fib here? There's nothing wrong, eh? Put a fib low, fib high. Then the same theory applies. Oops, where am I? Same theory applies. Wait for a bounce here. A bounce here. Alright. But again, like what I said, because of the NFP news. Alright. So even if it bounce and go up, I wouldn't want to do anything. I would want to wait after the news and see how the price move. Yep. Hope you understand, because news are coming. So I don't want to pre-decide anything, because news will spike it down or spike up. Alright. But just to give you an idea how I would look in a lower time frame. So heading back to the hour. Okay, back here. Just going to hide away this range box, right? Yes. Alright, so that's the daily activities. And yes, there's something else I want to tell you. That's right. Previous day, yes. Right. This is in regards to this area. Yep. I forgot about this one. Earlier we talked about the fib, right? How you decide to buy or sell at this level. We talked about the fib 50%. We talked about the 50 SMA, the break above of this trend line heading towards this trend line here. So the other point I want to talk about is this one. You can see why I draw all these previous day high, previous day midpoint, previous day low point, and it just gives me one more confluence that okay, price doesn't even want to go lower than the previous day midpoint. All right, so you could also use it as your stop loss level. All right, if you don't have this one, your stop loss might just be here, isn't it? Okay, of course you don't want to put it so low here. So previous day midpoint then becomes a stop loss level for you, and also as one more confluence to convince yourself to take the buy trade up. Okay, and I also want to talk about how you add on to the trades, right? So if you had started buying bullish here, you will notice that let me zoom in this so that it's look better. Okay, so if you are already convinced that the price is going to go up, okay, so your first purchases will be here, isn't it? Right, you buy a trade up, and then it retests the sell zone. There'll be another level. Excuse me, sorry. In reality, when it closed above here, you would have bought here, and then you stop here, break up above. In reality, once it closed above, you will buy another trade here, right? You just keep buying because the bias is to go up, and what happened is that you will get a shock because price then start to come down. You know, you will be losing profit here, you'll be losing the profit here. But the point is, when it start to creep up, that's when you need to add on, power it up, because it's basically a test and shot up. All right, so you would have entry here, you would have entry here, you would have entry here, you would have entry above the buy zone, you would have entry above here. All right, so you would have an entry maybe above the buy zone after you retest, and then maybe you add up again. All right, once it's here, it comes down, and then once it go up, you buy again. Right, you buy again. Right, you buy again. And then you see that it is nearer to, what is this level? Yep, with the fib, isn't it? Remember we do the extensions, right? So this is nearing to the extension level, so you wouldn't want to expect it to go much more higher, and because of the time, okay, there isn't much liquidity. I wouldn't say liquidity there. I mean, London is closed, it's only left with New York, and you need to expect some retracement back here. All right, so this is how you add on to your trades, okay, when price is going to your direction. Now, many of you in the lower time frame trading in 1 minute, okay, I strongly believe you would have already closed when price reach here, and you have already gone out of your trades. That's nothing wrong, okay? If you only need 20 pips, that's why is the purpose of this my group, FX 20 pips. Now, if you only need 20 pips and you achieve that easily from here, that's good, all right? This is none of your concern if you don't need more than 20 pips. You are happy to take 20 pips from the market every day, all right? That is fine. All right. Now, also, another way to look at it is, if you are not comfortable with buying here when price is below the sell zone, all you need to do is wait for the price to break up above the buy zone, isn't it? So based on the theory of 1-2 candles, so when price go up here, you don't do anything. You do nothing, you do nothing, you do nothing. But once price close above the breakout buy, followed by a second candle, alright, then you should really take focus and look for a buy. Okay, I can't remember whether the price dropped down first or came up, dropped down and came up. I don't know, but you will be in shock here. So the point is, first candle close above, second candle is a bullish. When it closed, very high chance is you most probably enter a trade immediately right here. The moment you enter, the moment you start losing money, right? But if you see the price start creeping up, you need to power on it, because it becomes a retest and up. At that moment of anxiety, you wouldn't know. Okay, you power in here, you could have already stopped loss here, so you lost money here. All right, when you lost money, forget about this. Money is lost, so be it. You need to keep watching what happens to the candle. All right, if you keep going down and that's it, I mean, you done your best, you based on your trade setup. Okay, market didn't go your way. But if you were to forget about this loss here, right, you would see that price start to retrace to go up. It never come back below the breakout buy. So how many of you would then put in a second trade just to buy up there? Now you have to think that if you were to buy here, your stop loss is only here. Alright? Okay? So don't, because of the losers here, you walk away and disregard all this. Okay? You would have missed this opportunity to make back your money. Yep. However, if you are thinking of a higher time frame bullish, and if you have bought here, this type of retracement should not bother you, right? Okay, because logically, where is your stop loss? If you enter here, this will be a very tight stop loss. Anything below the breakout buy is a reasonable stop loss, because the idea is, if price is supposed to go up, it's not supposed to come back down below the breakout buy. Yep. Okay, now based on candlestick, this would be another stop loss, right here below the 50 SMA. If price is supposed to go up, it shouldn't come back here. Alright, so a lot of you wants to have high risk to reward ratio. Okay, you enter here, your stop loss is here based on the 1 minute, right? Am I correct? Okay, you enter here and then you go down to the 1 minute chart, and then in the 1 minute chart your stop loss could be here. Okay, and within 10 seconds you got knocked out. Excuse me, isn't it? And then you got stress and everything like that. So it's really depend on your personality. All right, and what I've been showing is, look at the higher time frame, look at the higher time frame. All right, then you should be able to absorb all this shock here, and with a firm understanding of why the price is behaving this way. Okay, this one is a mild shock, but then it gives you another opportunity to buy, add on to your winning trade, add on to your winning trade. Yep, I hope that I have teach you something new today. There's always new things to learn. Alright, and before I forget, let me complete the daily activities for this. Where's the low one? Right, and let me remove. Okay, that's fine. Alright, so previous day high is here, previous day low is here. Get the FIP, put it here, and 50% just roughly. There we go, and then I close it. Now what is this level here doing? Let me just look again. Oh, that's when I point up to the high there. So let me, this is not necessary, remove it. So going back here. So there we are. That's the daily routine. High, midpoint, low. We got breakout buy and sell. Today with a non-farm payroll. And the immediate resistance would be the fib extension of 168%. I think it was around here. And then the major trend line. Okay, let me just block out the extension again. It was this, isn't it? 1, 2, 3. Yes, so there we go. That would be the immediate resistance here at this area. Okay, the news might force it up. Then it is really a very bullish trend. Okay, I expect it to come back with the news and then shoot up again. Right, and another fib, the normal fib. Let's put it here to here. Why should I just put it here? But it looks sensible here, right? Yeah, it never closed above. It never closed above this line. Stop here and then it came back down again. Right, so the previous day high is very important here. So look at that midpoint. Yeah, midpoint of course is 50. So like I say, you might come back here or here before going up again. Or what do I know? Price could just keep crashing down from here. Alright, so alright, that's all I have to share today. It's a Friday. Remember news, non-farm payroll. Don't get into the trade before that. Just wait for the news to come up. And alright, that's all for me today. Thank you. See you again.